Okay, good afternoon, everyone. Welcome to eFund's semi-annual open house. We do this semi-annually because we want to know what's going on with our portfolio companies. So we're going to hear all about that today. We're going to start things off by giving an overview for all the guests here about what eFund's about, how we operate, and we're actually going to do a live meeting with one of our due diligence funnels. So we're going to do that, and then we're going to move over to our performance numbers. And so those fabulous quarterly reports that you get are put together by Peter Dorsman, our director and CFO. And then after that, I think you'll be really smiling with those news, hopefully. George Altiris, who's our third director at eFund, will go through the portfolio companies and go through their updates. So let's get things started. Next. All right. So if you want to know how eFund operates, we are in the angel investment business. So if you're here thinking that you're going to make a quick buck, that's not going to happen. We have 15-year overnight success stories. We actually had one last year when they were a well-known technology company that got a lot of investment from our local investors, including eFund. Redland Technologies put a big smile on everybody's face with their 15-year overnight success story. So we invest just before venture capital, the institutions, and after the friends and family. And the whole purpose of angel investment money is not to make the widget works. It's to make sure that whatever business model that the entrepreneur has to sell that widget works and becomes really robust. Because what we're doing is we're setting it up for scaling for when the institutions come in and they give money to scale that business, because that's what they're good at. We're very good at making sure that a business model is viable and robust. So we do have an advantage: people, process, and partners. We do not work in a vacuum. We are very conscious of all the other ecosystem players, and we work a lot alongside with them and even do due diligence with them as well. We have a process which you're going to experience in just a few minutes, but we do active deal screening. We do a lot of thorough due diligence, and just because we write a check, our actions don't stop there. We also follow up and assign our own very own eFunders to do the post-investment management. And with that, we get higher investment returns. So here's our investing process. We have a number of partners that we work with in our ecosystem. We work with Vantech, we work with Angel Forum, we work with Capital Investment Network, we work with Women's Equity Lab, and so many others. And apologies to the ones if I missed you. Oh, the 51, Valhalla. There are a lot in our ecosystem, and we get referrals from these presentations, the entrepreneur ventures, and then they come to eFund. Now we have a very slick process for this. So we're going to just experience this. I'm just going to run through this very quickly. And so we actually meet every single month and do a lot more in-depth discussion. We just had a little bit of a piece here. So there's some, so you can see some benefits of being part of eFund. So besides what you just experienced at a very high level of how we solicit our companies and move it through our process, these are the obvious benefits. We are VCC, which means that we get that 30% tax credit, RSP, TFSA eligible. All the work that people do on the due diligence, they get rewarded. So if that company, down the line has a good exit for us, remember the 15-year overnight success, that team will get a piece of the carry. So that's really important for a lot of us. And we just started eFund number 6. We've done 5 cohorts right now, so we're on our 6th one. So if you're interested in investing, and I hope you will be after listening to the performance figures from Peter and the company updates emceed by George, I hope you'll join us. It's a very small minimum, 10K. Peter, I hand it over to you.
Okay, so here we go with sort of the performance overview. And this is sort of the general slide where you see all the companies that we've invested in and that we're invested in at the moment. And, to really sort of bring it down a little bit, like we've made 78 investments in 42 companies, so across the fund. So a number of companies are in different funds. We've had 5 exits so far and 4 with positive returns. We've had actually more than 4 write-offs. I'm going to get to that in a minute. And currently there's 33 active companies in the portfolio. Reasonably well diversified. We're about a third into health tech and a third into software. The rest is Internet of Things, agri-food, IT hardware, clean tech, and a bit of fintech. So I think we've got a pretty diversified slate of companies. Can you go to the next slide, please? So what happened last year? We didn't have any exits, and I've heard that complaint from a number of other funds as well. It was a slow year for exits. We did new investments in Solaires, VoxCell, Agility Forex, Care to Talk, Total Flow, Frontly, and Zenea. We re-upped in Messentech, Vitamin Lab, Claris Lucent, BarrelWise, and Arbutus. So these are companies that are doing well, and we up our investment. We had to write off Orbit less, and we still have Navigate Surgical, ViewsIQ, and QPath on sort of the watch list of companies that are not doing all that well. So I have one update, and that came through actually on Monday this week, and it is a complete bombshell. You see that we've invested in Zenea in July last year. We got a notice from the board that the company is going to be dissolved and all the assets, the remaining assets, to be distributed to shareholders. So we're trying to figure out what went on. The communication, and I think Woodif was also in that. A lot of big Vancouver investors and funds were in the company. We're trying to figure out what exactly happened, but it feels like the board has made a determination that it cannot execute on the business plan with the money it has raised last summer. And it's going to sort of redistribute these slides of these funds back to some of us. So we maybe get some money back out of Zenea. We'll have to see what happens after that. How do we do it as a fund or through the pandemic year? So we have really, it was like 3 years, if you think about it, that we went through a major market adjustment, but then it turned out there was lots of liquidity in the markets. As of January 1st, we had raised $2.26 million. As of a month ago, we are at $4.75 million raised. The fund value, right, has increased from 6.8 million to 13.9 million dollars. So, overall, if you look at the entire portfolio, we've done very well, and we've kept raising money through the pandemic period, and we hope we can continue to do that. So we're in pretty decent shape there. Can you give me the next slide, please? So it's getting more and more complicated, but it's actually quite simple. So we have 6 sub-funds who run for a certain period of time. We started with Fund 1, Fund 2, Fund 3, 4, and 5, and now Fund 6. So the portfolio value of each fund, based on how each fund is doing in terms of how companies raise money at higher valuations, I calculate the value of our investment in those companies, and you get to a total fund value. For some funds we've distributed on exit, so you can see that the total value that's being created in eFund adds up to 13.87 million. So that's the value of the current portfolio, cash that's still in the bank, and exits to date. Then I contrasted it with what has been raised in each fund in total. So you will see that in all of our funds, we've had a net gain. And as I always say, it takes time to see a return on your investment. Fund 1, we're in there for 11 years now, but the return is 13 times and over 1,000%. And how that comes to be, I'll get to in a minute. But most of you will know that it is driven by Semios, which is a unicorn and $1 billion company. So these are the gains that we have recorded in each fund. I think we're doing reasonably well. It takes time. And if you think about it, like all the way from 4, 5, and 6, we'll see more and better results, and even from 3 on in a number of years. It takes some time to get there. Okay, we'll get to the next slide, please. And so this is the finance. I thought, why not I put it in sort of a graph? So you see Fund 1, Fund 2, Fund 3, Fund 4, and Fund 5 over the last 7 years. The first few years we didn't track it as well, and not much happened. But you can see that in Fund 1, the value has gone through the roof, largely because Semios, right? That's the result. But the other funds are not doing that badly. They're beginning to grow, and hopefully we'll have a few other winners in there as well that contribute to the return. Now, how do can we sort of guess what sort of companies, what sort of return they will be doing in the future? Can you do the next slide? And what I've done is I said sort of, why don't we break down the portfolio in how they're doing on the financing scale? Like, after we invested, how many financings have they done, and do they get to the point that they get VC funding, and do they get to the point that they have an exit, right? So if you look at it, I've listed the companies where we've lost money. I've listed the companies that are neutral, and we sometimes call them zombie companies. They're not going to go out of business, but they're not going to grow spectacularly. Here are the companies in the first round: HTuO, Total Flow, Frontly, Care to Talk, Solaires, VoxCell. New companies we invested last year. The ones that I've highlighted in green are already working on their subsequent financing as we speak. Companies that have done a second seed financing and are therefore really well capitalized to take the next step are on that list, on the column in the second seed. So that's about 29% of our portfolio. And I know Vitamin Lab and LetHub are already working on their subsequent financings, and Vitamin Lab is actually, it's a VC type round. So they're doing well. The next column is companies that are venture funded, right? So they're way ahead. So we stop investing in them. This is what Telstra always calls, we're along for the ride. They're going to be successful because well, we hope they will be successful, but they have a much better chance because they're now venture-backed companies. The last one to do that was Mizumago, who's closed a big round with US investors, and they're off to the races. So, and then we have Semios, which is a $1 billion company based on the valuation of their last round, and then we have exits had that with Solgear, Mazda, Bluebet, and Redland, and the most successful one, as most of you will know, was Redland. So I like to sort of track this and see how our companies do on what I would call the financing continuum, or you can call it, like I did, the portfolio progression, and we can see sort of where the problems are. So in one snapshot, and you can see percentage-wise how our portfolio is doing. So I don't think it's that bad. I think we're doing reasonably well. We've got a number of winners, and I think they're going to be, in the middle ground, and especially here because they've got their VC funding at relatively high valuations closed in the fairly recently. Next slide. That being my last slide. So who are the winners? So I mentioned Semios, right? Semios is in all of our funds, right? But the people who were in Fund 1 do well because it was early. Redland was in all of our funds as well. Everyone got a check, and the returns were across a number of different funds. Penny and Squamish, they just did a big Series B round with a group of US VCs doing very well, 7 times return. VINN did a venture financing. Mizumago did a venture financing. Vitamin Lab, it's not factored in yet, the VC financing, because it's happening. But they've got the decent returns and aspect as well, and you see they're spread across the funds. And what we try to do when there's an opportunity to top up or come along and exercise our pro rata rights, we will do that so that we have, in particular for the winners, we increase our relative position in order to maximize the return for all shareholders. So the way that usually happens is that the due diligence team will write a short report, and then we'll discuss it at the board level, and then we exercise our rights to participate in the subsequent financing. Okay, that is it from my side. Are there any questions? Do we have time for questions, or I think we do, 1 or 2? Otherwise, I'm around for lunch to ask you. Hopefully, the written report will come out next week with a lot more detail, and I think we can now go to George, to your part, right? Right.
All right, thanks, Peter. So now we have the updates. Not every company has provided an update, but what we do here at eFund is we provide the opportunities of our portfolio companies to provide a 90-second update for the most part. So we have 12 companies today that will be providing an update. Now, Jackson is queuing up the companies, but why don't I call two startup companies that are here in Alan and also Kenny to come up to the stage over here so we can actually be quick on the update and provide the opportunity for Jackson to load up the presentations. So ready to go? Okay. All right. So, but as Peter said, that certainly portfolio and some of the great success stories and hopefully continued success stories that we have, and certainly SprayWerx and ViewsIQ now are coming up from different funds, but they certainly will provide a nice view of their updates. So ViewsIQ, why don't we start off with Kenny? And you've got 3 minutes.
All right. Okay. Thanks, George. All right. Hello, everyone. My name is Kenny, and I know George mentioned that with ViewsIQ, certainly I think there's familiarity with that. I'm actually going to focus today on ViewsML, which is a completely separate entity, separate technology. And that's really what I'm going to focus on today. I'm going to tell you our story around how we're revolutionizing drug development in cancer and companion diagnostic using AI machine learning. Next slide, please. So traditionally, the same treatment is used across all patients for a given disease type. And with that, people respond to varying different effects. And really the advent of precision medicine is really to handle and tailor treatments to the individual genetic differences amongst patients. And those differences are identified with biomarkers, or in other words, companion diagnostics, of which this market, the CDX market, is expected to triple in the next few years. And immunohistochemistry, or IHC, is the laboratory process that's used to detect these biomarkers. Next slide, please. So the steps behind here that you can see are a schematic of that IHC process. Don't worry about all of the different steps. Just know it's a cumbersome, tedious laboratory process. It's long, expensive, arduous, and there's variability. Using technology that we have, which is AI machine learning, we physically bypass all of these steps associated with IHC. So we give researchers back 100% of their IHC time and 50% of the budget back. Next slide. This is a little bit more of a magnification of the actual data itself. For an example, on the left is a physically stained slide. The dark brown spots are the positivity of the biomarker that you can see if you were to put this in an actual lab. And on the middle panel, you can see is our virtualized predicted result. Those dark spots you can see on that area underneath the curve, very strong correlation in terms of sensitivity and specificity between the two. This can be trained across all biomarkers. And with a top 5 pharma that we are initiating a formal paid collaboration with, they quote, "What sets you apart and the reason we wish to collaborate is your use of AI to spatially visualize biomarker expression at the cellular level." Next slide, please. We have a very experienced team. I'm not going to go through all the details. Myself, background of startup through to multinational pharma, serial entrepreneurship, including within this specific space. Keith, who's grown sales up to 1.6 billion. We have a board certified pathologist who's the CSO and co-inventor, a CTO from GE Healthcare, and then a medical director who's also a pathologist with over 20 years of experience. Next slide. Finally, just to kind of end off, this technology was in-licensed through Dartmouth in New Hampshire. We launched our MVP late last year. I mentioned the collaboration we're initiating now, and we have a pipeline of additional pilot studies coming through. That's it. Thank you. Oh, importantly, I should say, we're actually just kicking off a launch of a fundraise for 3 million. That's important.
Thanks, Kenny. And just to clarify, so ViewsIQ and ViewsML, while they're 2 separate entities, we do have a shareholding in the ViewsML. So that's why they're here and pitching today as part of their new financing. Exciting opportunity. So let me pass on the mic to SprayWerx.
Thank you, George. So just to give you a bit of background on SprayWerx, we're a nanotech company located in North Vancouver, BC. We manufacture our ID HVOF gun, which is used to spray in internal surfaces such as the inside of pipes with wear and corrosion resistant coatings. It's used in aerospace, oil and gas, clean tech, mining industries. It's quite the number of applications span pretty much every industry. So basically, I'm giving you the 90-second update on SprayWerx. We're a new member of the eFund. Basically, the reasons to celebrate. We just launched our brand new MK7. This is the 7th generation design of this gun. This was developed in response to a request from one of our customers, Siemens Energy, to produce something that had a little bit higher power. And this was to provide coatings for one of their steam turbine components. We've also delivered systems to Pratt Whitney and their CMQ research hub, and extreme coatings in Florida and NRC in Boucherville, Quebec. We've got in November, we just had our European patent. It was issued, and it can be expanded to Germany, Switzerland, France, England, and Liechtenstein. So we are actively raising money at the moment. We're on a quest to raise $1.5 million. We've got 250,000 of that committed, eFund being part of that. We are EBC eligible. We just got our commitment verified last week from the BC government, and we're actively ramping up our fundraising activities at the moment, and we're also joining SFU Ventures Lab here to increase our marketing activities. I think we got a very good program here in terms of marketing. So basically, in some of our KPIs, and last quarter we delivered 4 systems. And as I mentioned those previously, we sent out 23 quotations. Revenue in 2022 was $610,000 with 120 or so in Q4. We are generating revenue. We've got patents. We're actively pursuing additional patents to follow up on our patent portfolio. We've got growing interest from major companies for our technology. So that's what I have. Thank you, George.
Great, thank you so much. Okay, so now we're progressing to the online portion that will either have a slide or a pre-recorded message. Jackson? Okay, great. So we got VoxCell, which is pre-recorded.
Hello, everyone. My name is Dr. Carolina Valente, and I'm the CEO and CSO of VoxCell. And I'm here today to give you a little bit of an update of what has been happening in VoxCell in this past 1 year and talk a little bit about eFund. So VoxCell is a company using bioprinting technology to create human-like cancer tissue models. So the idea is we are 3D printing these tissue models that have this human-like blood vessel structure. There's a hollow structure in which scientists, researchers can inject drug therapies to this blood vessel-like structure and track how this therapy interacts with the cancer cells and the cancer microenvironment. VoxCell has been around for a little bit over 2 years, and eFund was our lead investor last year for our pre-seed round. And eFund got officially involved with VoxCell during our first closing, and our first closing was in March last year. So it has been more or less a little bit under 1 year that eFund has been involved with us, and in this 1 year, VoxCell is very close to releasing products to the market, where our bioinks right now are under beta testing with some key opinion leaders. We are validating our tissue models with the help of some contractors and also some very good advisors. And in these a little bit under 1 year, VoxCell has also raised $2 million, and none of this would have been possible without this help and support of eFund and all their network. So thank you very much, and I hope you guys have a great day.
All right, so just Interpodia, you are familiar with some of the amateur athlete associations that use a platform to register. So they kind of manage the whole process of athlete registration concierge service. So this is what they do, and a bit of an update for them. So they're still certainly have recovered from the whole COVID pandemic. Bookings or registrations for these amateur athlete events have increased enormously. Strong growth, as you can see here, and a continued growth in terms of revenue and gross profit margin. And their pipeline continues to be strong. So really a great success story coming through out of the COVID pandemic. And we expect that the company will continue to grow on a very strong trajectory. And maybe the next company now. Solaires, that should be a pre-recorded video. And Solaires is in the clean tech space.
Hello, I'm Fabian de la Fuente, Solaires CEO. I would like to tell you about our progress. Our KPIs are looking good, with 180 sales and partnership leads, 1 letter of intent signed, 28 orders of solar ink, from which 10 customers have provided feedback, and a total of almost $8 million in funding received. We also have more reasons to celebrate. We have secured our own lab space in Langford, and our module manufacturing expert has made our first 1.5 by 3-inch solar module like the one I have in my hands. In December, Sahar traveled to Japan to meet in person with key potential partners and customers. And we accelerated the development work with our partner, Bright Solar, by sending our lead scientists to make ink on site. In addition, Solaires was selected as a deep tech pioneer to exhibit at the Hello Tomorrow event in March. Our greatest drivers of value are an experienced team, our unique technology which makes us different from our competitors, our market traction with early sales and pilot testers, and our IP strategy covering 44 innovations. We will love your help in getting the equipment we need for our new lab. If you know someone with second-hand lab equipment, please let us know. Thank you.
All right. Okay, HTuO Biotech. And they're in the drug discovery tool space. So they help accelerate drug discovery using their technology platform. Okay, so Anthony could not join us, but he had a very busy week at the biotech showcase and as part of the San Francisco JPM Morgan last week. So in terms of what they've done in terms of KPIs, they continue to demonstrate technology validation with some of the key partners or key companies in biotech. They've grown the team, and importantly, they've grown commercial interest to signing up evaluations. And they also are just completed a round for 1.5 million in 2022. Their first white paper is out that they're using for BD purposes with biotech and pharma companies. As I mentioned, they just came back from JPM in San Fran, and they're releasing their MVP as a part of the next step of commercialization. They've got IRAP, and they're just moving into discovery parks. So all good things in terms of, again, as I mentioned, they're working hard to bring in new partnerships in pharma to really drive that whole revenue growth in the future. And they've begun to have some inbound service requests itself. And in terms of what eFund can do and help them is introductions to board members. So if anyone has any personal introductions, that'd be great as an independent board member. Also, they're hiring for a marketing specialist. So anyone has within their network that can serve in this role, be great. And also introductions to VCs as part of the 2023 financing. Because again, they're raising the next raise at the second half of the year. That's it for the update. Yep. Okay, Total Flow. And just to, what does Total Flow do? They're a med tech company in the cardiovascular space as part of open heart surgery. They basically help make that whole surgery process more efficient, less adverse events, better outcomes. So in terms of their key things, they're looking at tech development, regulatory, market access, because they're pre-revenue. It's all about product development, getting market access through regulatory approval through the US FDA. Their device is part of kind of like as part of open heart surgery. So they have to kind of like deal with the whole bypass of the circulatory system. So they're just basically a catheter system that kind of piggybacks on the overall process. So they've initiated their 4th product build with ongoing test validation. They've had some meetings with the FDA, which is very important to get into the FDA clearance and approval process, as that you have regular meetings, pre-submission meetings. And they also have ongoing market access insights into KOLs. Obviously, those 3 things in terms of what drive value as part of next steps in their financing. In terms of how we can help them, they're still looking for introductions to US-based practitioners in the cardiovascular space. So that's the ask. If we can support that, it'll be great, again, in the cardiovascular space. All right, so next company. BarrelWise. So BarrelWise is in the ag tech space. They're in the monitoring of wine fermentation. So it's very important to increase your yield and quality of wine. That's what they do in terms of their technology solution. So they basically, their solution is part of the whole fermentation process of winemaking. So their ARR is 155,000 as their goal, targeting to exceed 1 million by the end of 2023. They've got 6 systems deployed and another 11 committed. So these systems are predominantly in North America, California, and in BC. So these are winemaking, Okanagan, Napa Valley, those wine growing regions. They're a data plays. They're collecting data on the fermentation process with their tech stack. So they have lots of data being generated, which is key about delivering better outcomes for their wine fermentation. So these are some of the companies that they are dealing with: Jackson Trigg, Cedar Creek, Time, Robert Mondavi, obviously is a large winery in California, J-Lore, Pat's, Hall, Hand States, and Columbia Crest, and now has completed a case study with Rodney Strong, which achieved a 5x increase in the number of FSO2 measurements BarrelWise, and now they're measuring 100% of barrels in their premium lots. So they're moving from medium to a high quality product, greater margins, which is great. And they've also secured IRAP funding of $500,000. All good things, great progress. And they also did close a financing early in the year. And of course, as drivers of value, customer adoption is key, and then use by customer, and then systems manufactured. So they're looking for help from us in terms of manpower. So looking for a senior hardware engineer and also customer success rep. That is in California. So anyone has any networks of people in that, both here locally for hardware engineer as well as customer service, that's what they're looking for. And also obviously referrals to any wine makers as well. So that's what they're looking for. So please extend your network and let us know if you have those introductions.
Hello, eFund.
Okay.
My apologies for not being able to join you this evening, but I'm excited to update you on BarrelWise's progress. It's an exciting time of year for our company as wineries, who are our customers, have gotten through their harvests and fermentations, they have settled down, and they can now begin evaluating projects for the upcoming year. We've had several reasons to celebrate recently, including successful deployments of our FS1 system at Jackson Triggs, Cedar Creek, and Time Winery throughout December and January, and we have some upcoming deployments scheduled over the next few weeks at notable wineries like Robert Mondavi, J. Lohr, Patson Hall, Han Estates, and Columbia Crest. Additionally, we completed a case study recently with our customer Rodney Strong Vineyards, who achieved a 5 times increase in the number of free SO2 measurements that they're able to take with BarrelWise, and they're now able to measure 100% of barrels in their premium lots. We've also recently signed a contribution agreement for a $500,000 IRAP project with potential $150,000 top-up. Our current annual recurring revenue is $155,000, and we're targeting to exceed $1 million in 2023. We've successfully deployed 6 FS1 systems to wineries in California and BC, and have 5 additional systems committed for future deployment. Since our initial deployments last June, our customers have completed over 9,000 successful measurements. At this time, the eFund community can best support BarrelWise in the following ways. Firstly, with referrals for open positions, which are currently a senior mechanical engineer in Vancouver and a customer success representative in Napa and Sonoma. Secondly, referrals to premium or large production wineries are always appreciated. Thank you for your continued support of BarrelWise.
Okay, second shout out. All right, next company, Jackson. ViNN. All right, so they're in the whole automotive lead generation. So people actually interacting with the dealer prior going to the dealership. So they're really about lead gen into the dealership because everything's going online. That's the trend that they're leveraging. And Jackson, if you can put up the update. Perfect. So again, this company also did a large financing VC backed early this year. So they're well capitalized. Again, they're looking at obviously the monetization of outbound customer, inbound conversion rates, and net customer acquisition if they can actually increase acquisition, but also reduce the cost of that acquisition of customers. So reasons to celebrate, they have rapid year-over-year growth of over 400%, which is great. And they're expanding across Canada, and they have significant improvement across all core KPIs in 2022. And they have, of course, built a strong team, and they're continuing to build a strong team with strong culture focus. In terms of values of drivers, again, they're looking at optimization of process, really focused on the customer. So they have over 700 5-star reviews, which is great because they are very much a consumer-focused effort. And they have new products in market to diversify the experience of customer. And their ask from eFund is intros to potential marketing hires. Again, another ask for people. So if anyone has people in the marketing departments, they would love to hire people, and also are beginning to view as their next financing, because again, they just closed their Series A, so they will be looking at a A+ or Series B in the near future. So that's what their ask is from us. So great update. And the next up company, Ibbaka. Ibbaka is Stephen Forth and Karen Chang, which is one of our also investors and portfolio companies. They're in the space of value pricing optimization in terms of their solution offering. Their revenue of past year is 1.4 million. They have a subscription of $110,000, and they have 5 customers on their new system. And they're really focused on the Ibbaka Valio product portfolio and pricing and customer value management space. Really focused on B2B SaaS, and they're focused on cybersecurity, MarTech, and FinTech, and have partnered up with some PE and venture groups so they can actually grow their portfolio more aggressively, including with Apex, Arthur Ventures, and Peak Spam. And they've got funnel visibility of 2.8 million in revenues with $500,000 in subscription. So again, good progress. And the drivers of value, of course, is about increasing the average selling price from 20% to 400%, and improve net dollar retention and reduce discounting, and of course, increase customer lifetime value. How we can help them is, again, it's about social media, bring awareness through follow Ibbaka on LinkedIn. That's their ask. Also subscribe. Stephen has some great monthly newsletters that he sends out. So I've read them myself. They're quite good reads and quite useful. And then comment on their content, just about increasing awareness. All right, so Care to Talk, we have Jordan. I did see him online, so it'd be great to have Jordan talk about Care to Talk, because they're also just closing a financing or bridge round, if not mistaken. So do you have Jordan?
Yeah, thank you, everybody.
Perfect.
Yeah, I submitted a pitch deck, but I'll just give you guys the 90-second pitch. Thank you, eFunder, for being an investor in both a previous round and then this exercise in their pro rata. So special thanks to everyone here. Simple, what Care Talk does, we have a platform that connects family members to their seniors or loved ones and have that healthcare component. So the aging kids can connect their parents to a physician and be part of that kind of health journey. So we're in the communication health space, providing simple care and connectivity on behalf of the senior. We're currently at 16,000 MRR. We have 2 deals pending right now, so we should be at that 31,000 MRR by end of month or mid-February. And just on the screen aside, the problem is still the lack of technology and tools, affordability for seniors. So that's kind of the update of our product. So we provide a tablet for seniors. It's locked down, it's dummied down, and then the loved ones have an app they download on iOS or Android, and they can use telehealth. They can book appointments for their loved ones and be part of that kind of health journey that everyone's so distant in this space. Q1 kind of 2023 pipeline. There's lots in the deal. There's lots in the funnel, and so the purpose of this bridge round was to just get us well into 2024 without worrying about financing. So this bridge round was just part of just to kind of get us over that worry. And so, yeah, we're about 75% subscribed now, maybe 80 as of this afternoon. So we have a small amount left. And thanks again for eFund to participate in both rounds. So thank you.
All right, thank you, Jordan. Any other asks that you have for us other than the capital ask?
Yeah, capital ask would be nice. Obviously, like, share, follow. We have a good presence on our LinkedIn page, so we're good at networking and connecting with folks that have gone through this journey or going through this journey with their parents. So always open to conversations. We have a pretty good kind of fan base of just our current investors using our product. Plus, obviously, referrals are great to care communities as well. So that's kind of the ask and support. And yeah, eFund's been great. So.
All right. Well, thank you so much for the update. We look forward.
Thank you so much.
All right. So we got LetHub.
I'm Faizan, and I'm the founder and CEO of LetHub. And I'm going to be walking you through some of the stats and who we are, what we built. So just to give you a bit of background, we at LetHub rent out properties mostly for rental property managers, and we rent them out 10 times faster than a leasing agent, and we use AI and automation to achieve that. Currently, we're going through this evolutionary sort of life cycle of property management, specifically prop tech, and we've seen that in the past. Right now, companies are more going towards automation, and you'll start seeing new billion-dollar companies being built. Everyone wants to completely automate the whole experience of renting out an apartment or a house. Around 15 million people every year in the US and Canada are looking for a place, and the whole process is very painful. Whenever you are on a website like Zillow or Zumper, you submit an inquiry, you never hear back. And that is because the property managers are busy. They have to put up ads. They have to deal with 600 to 700 emails a day. They have to vet the candidates and schedule everything so that they're not running around town. So we help solve that with a unified platform. And that's what we are. We do all of it, so you don't have to have multiple tools for different things. And it's fully automated. One of the main benefits of LetHub is that we get you more showings. We reduce the time that a property is on the market, and we reduce the number of hours that you spend on managing things. And of course, we're always innovating. Last year, we released a new version of LetHub where you can drive to a property, take a picture of yourself and your ID, and you can see the place by yourself, just like an Airbnb. We've already saved $3.5 million in rent, so recovered that and saved wages up to $6 million. We have 6x in MRR. We've around 18,000 units under management. We've booked close to 500,000 in showings, and we're en route to profitability. Around 50K in the next 50K MRR in the next 6 months or so. We're currently serving over 120 plus leasing agents and 28 plus logos. And we have a very simple way of getting sales. There's 3 different methods: sales, thought leadership, and partnerships through other property management software providers. To just give you a background, we do an annual contract, which is around 15 to 20K. It costs us around 2,200 to get a sale, and that's paid back in 4 months. Current market, just by charging $2 a door, it's something around 1.2 billion in ARR, and we're currently targeting mid-market companies. So we've already raised a pre-seed round. We've been extremely efficient with our capital. Now we're raising a seed round. In Canada, we're only doing 500K of the 1.5. The rest will be at a higher valuation in the US. So if you're interested in this round, please let me know, because we'll be closing very soon. My email is faizan@lethub.co. You can email me and I can pitch to you as well and share some more stats around LetHub. So thanks for taking the time, and hoping to hear from you guys. Thank you.
All right, great update. Okay, we're done. Perfect. All right. So it was great to end up with LetHub. So, okay. And we just 12:04, which is just almost on time.
Pretty darn close. So thank you very much, everybody. This concludes the formal part of our semi-annual eFund update. And because it is pretty close to the Lunar New Year, Chinese New Year, Gong Hei Fa Choi to all of you, Gong Xi Fa Kai. And just, we have food, Asian theme style in the back. And those of you who are online, the party isn't stopping just now. We will have some random breakout rooms for you to network online. Hey, thank you very much, everybody. Before we just break, I want to thank my fellow directors, Peter Dorsman and George Altiers, and the Vantech network team, who has been working really hard behind the scenes to get this together. Jackson, Wendy, Roger, and Peter. Thank you.